Asia now in the joint venture, ASEAN will subscribe to primary shares and buy secondary shares from Solar Philippines. Solar's facility in South Luzon will be granted authority to bid for electricity supply as well. Now, ASEAN is also expected to share credit facilities with its unit, Santa Cruz Solar Energy, to enable the unit to actually join the biddings as well for the electrical supply. That bit of news, though, unable to pull ASEAN out of the sell-off it finds itself, or at least it found itself since Friday here. The stock is down close to 0.2% to 6 pesos and 79 centavos a share. Now, here are other stories from the corporate front. Digital payments firm PSEi said it's now operating more than 200,000 touchpoints nationwide, which serves over 28 million users. The company says this expanded network is 6 times larger than combined bank branches and ATM terminals nationwide. Cashless transactions surged in 2020 after the government imposed community lockdowns to prevent further transmission of COVID-19. More consumers likewise turned to online banking and e-commerce to get by during the period. PSEi is a subsidiary of Voyager Innovations, the digital arm of PLDT, shares of which are enjoying gains this Monday at 1,425 apiece, up 2.5%. Now, Converge is aiming to cover more than half of the country's households. That's in the next 5 years. In an interview with Businessworld, Converge ICT CEO Dennis Anthony Uy says the company is hoping to serve up to 5 million customers by 2025. Converge ICT reached 1 million subscribers last year, noting that they continue to see strong demand this 2021. The fiber internet provider is also eyeing to sustain its growth as it expands its services to other parts of the country. The newly listed firm recently reported an attributable net income of 2.19 billion pesos for the first 9 months of 2020, up almost 6% from the year before. Converge attributes this increase to their pure fiber expertise, which Uy says helps in Filipinos' work or study from home arrangements amid the pandemic. Converge ended today's trade up 2.2% to 15 pesos and 90 centavos apiece. Now, here are other headlines we're keeping our eyes on. Job creation this year will depend largely on the efficiency of the government's infrastructure program. That's according to InfoWatch convener Terry Ridon, who warned that underspending despite the pandemic will further disenfranchise workers in the sector. Ridon said the government should do what it can to deliver on its promised infrastructure projects this year to boost the economy. Although he added that this should be contingent on our ability to fund the pandemic response, including vaccine procurement and possible future lockdowns. However, for UP Diliman's Political Science Department Chairman Herman Kraft, pandemic mitigation and the upcoming elections could serve as stumbling blocks for infrastructure spending. Kraft says the government should ensure that such projects will not be used for local politics as the presidential poll draws near. And the recently signed Regional Comprehensive Economic Partnership, or RCEP, may likely expose the Philippines' lack of competitiveness in manufacturing. That's according to a senior equities research executive at Regis Partners. Regis Partners Chief Strategist Rafael Garchitorena says the 15-country trade deal may play a part in lowering import prices and tame inflation, but it may also highlight the gap in manufacturing capacities within the region. The trade agreement was signed last November during the ASEAN summit hosted by Vietnam. The Trade Department has touted the deal as opportunity for export market access, but Garchitorena says RCEP is a small net negative for the country. He noted China being the growth engine of the world, and anything that gets the country into that orbit is more likely better than nothing. The country's GDP output expected to be out on Thursday, and a poll of 18 economists are pegging fourth quarter slump to have been somehow trimmed to negative 8.5%, our guest projects just the same. We have on the show Mike Ricafort, Chief Economist of RCBC. Good afternoon, Sir Mike. Glad to have you here on the show this afternoon. Hi, Sir Mike. Just checking if you can hear me clearly, sir. All right, it seems as though we are having a bit of a technical problem there with Mike Ricafort of RCBC. We are at least going to try to get him back here on the show. But again, as I was saying earlier, you have a poll of 18 economists here expecting GDP to actually somehow have eased, at least a slump, should have eased at least in the fourth quarter to 8.5%. That's on the back of expectations, that you have a number of growth factors here as well in the last quarter here. They are saying at least median GDP contraction of 8.5% for the fourth quarter, 9.5% for the full year here. They are saying that, and that of course is coming up from a higher base come in 2019, wherein economic output actually grew by as much as 6.7% in the last quarter of 2019 and by 6% at least in the full year of 2019. Let's try to get back on the show at least again. Mike Ricafort, Chief Economist of RCBC. Let's try to see. So far, we still don't have him here on the line, but we'll try to get him back as soon as possible. Again, a number of figures that we should be expecting for the rest of the week here, not just GDP figures. We have trade data as well expected to come in at least on January 27th here. You have a number of surveys here. You have exports expected at least for the month of December to somehow coming in at 2.7% here. At the same time, imports at the same time declining by as much as 11.7%. Let's see how that is going to come out, at least in the actual figures come January 27. And the following day, you are expecting GDP figures again. You have a number of analysts here pegging that to come in at 8.5%. That's 8.5%. Yes, that somehow is worse off compared to somehow multilaterals are actually pegging it. The likes of the International Monetary Fund, wherein they are expecting last quarter GDP to actually slump by 8.1%. That's 8.3%. The World Bank, on the other hand, is expecting last quarter GDP for 2020 to actually contract by as much as 8.1%. On the other hand, you have the likes of ADB, which says GDP is expected to come in at negative 8.5% during last quarter. At the same time, Fitch Ratings and Moody's as well also giving it the same projections, pretty much at 8.5% and 8.7%. Respectively. Again, to give us insights regarding as to how the economy fared in the last quarter of 2020, we're going to try to bring back on the show Mr. Mike Ricafort, Chief Economist of RCBC. Sir Mike, are you already with us? All right, it seems as though we're still having problems here trying to reach Sir Mike Ricafort here of RCBC. But again, going back to the figures that I was saying earlier here, you have a number of economists, including Sir Mike Ricafort himself, begging the GDP for the last quarter to at least have slumped by 8.5%. That, however, when you try to compare it quarter and quarter, is still a better output compared to how we did in the third quarter, wherein GDP slumped by 11.5%. And at the same time, that also is coming up from a second quarter GDP slump of as much as 16.9%. Last, again, let's try if Sir Mike is already with us here on the show, or at least everything is technically sound here. Sir Mike Ricafort of RCBC. Good afternoon, sir. All right, it seems as though we have lost Sir Mike here again. I'm sure if he were with us, at least he would have a lot of insights here as to how the economy fared full year 2019 and what we should be looking forward to in 2021. But again, GDP figures expected to come out Thursday this week. And those are the biggest news this trading day, January 25, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.